What deductions can you claim on a final tax return? When wrapping up a deceased person's tax affairs, many wonder what expenses can be deducted to lower the final tax bill. Knowing what to claim can make a real difference in the estate's overall value. Let's walk through the common deductions available on a final tax return. First, medical expenses paid before death are deductible if they were incurred by the decedent and paid within 1 year after death. This includes hospital bills, prescriptions, or any healthcare costs not claimed on the estate tax return. Next, funeral and burial expenses are generally not deductible on the person's final income tax return. However, if the estate is large enough to requiring an estate tax return, these costs can often be deducted there. Debts and outstanding bills of the decedent, like credit card balances or personal loans, can also be deducted from the estate's value when calculating estate taxes. This helps reduce the taxable estate amount. Administrative costs are another key area. Fees paid to the executor or personal representative, trustee fees, attorney fees related to estate administration, accounting fees for preparing the final income tax return, and appraisal fees for valuing estate assets are all deductible. These expenses are necessary for settling the estate and can significantly lower the estate's taxable value. Estate tax deductions are available if the estate owes estate taxes. Deducting administration expenses reduces the taxable estate, potentially saving money. Even if no estate tax return is required, some of these costs may still be deductible on the estate's income tax return during the estate's administration. For estates that involve a business, certain business-related expenses, like fees for business succession planning or income production, can also be deducted on the final return. It's important to note that personal estate planning fees, such as costs for drafting wills or trusts, are generally not deductible due to recent tax law changes. But fees for tax advice, estate tax preparation, or business succession planning may still qualify. Understanding these deductions helps ensure the estate pays the correct amount of taxes and keeps more assets for the heirs. Proper documentation of all expenses during probate is essential for claiming these deductions. Consulting with a tax professional or estate attorney can help identify all eligible deductions and ensure compliance with current tax laws. Being aware of what can be claimed on a final tax return makes the estate administration process smoother and more efficient.